So I was looking
Great.
in the past 25 sessions, only once has the opening range remained either the high or the low. And do you know what day that was?
What day was that?
Holiday, last Monday.
Holiday. Oh, that's in
The
gold,
holiday.
yeah. Crude oil.
Yes.
Crude oil's hit some decent ones the last couple weeks, but yeah, gold has been a little off. So we've been pretty balanced, pretty even. We even didn't take this trade for almost an entire week straight, right? Just because it wasn't feeling good. Here we go. We got a nice move here.
So,
I'm gonna
Hogue,
peel one off
with you
at
saying that,
2R.
yeah. In saying that, Hogue, do you think this is more of a see profit, take profit trade just because gold has traded both sides of the opening range so many times?
I mean, it would make sense. We get 2-1 on the one of these. I certainly
Right.
would suggest taking one off, and then just let the other one fly. I mean, we are up against some resistance up here. I've got 52.10, which is the weekly kickoff high. We tested the weekly kickoff low last week, and the gold markets are seeking balance. They're seeking areas where two-sided trade can occur. We had very low volumes in these metals last week, partially because, well, basically China was offline for the Lunar New Year. They pretty much took the week off. That has something to do with the volume, but the volume has fallen off ever since the big breakdown in these metals. There's been a lot fewer participants. The shorter time frame have been in control, and if that's the case, then we're seeing overnight inventory, which is presenting as a little bit long. I mean, there's a lot of time up here to kind of consolidate a lot of that overnight inventory. We've got VWAP, which is flat. So I'm certainly of the frame of mind. If we get a decent profit on one of these, we take the risk off, and see what happens the rest of the day.
And I just did that, Hogue. I 10% of this because we were seeing a little pop in gold, so I covered one at right around here, 51.69 even. Took one off. So we locked in some profit and we're carrying a runner. We're holding a runner right now. Ooh, there's some selling coming in.
Pretty good.
Good. That's great.
Very nice trade here. House count short, one lot now from 51.7520. One micro gold on an opening range breakout trade to the downside, 51.67 last trade here in gold. We're going to take a look at those charts on a higher time frame, but before we do that, JD, any news we want to get to?
I mean, is this news? Here's our fluff piece for the day, guys. YouTube's very first video is being displayed in a museum. Can you believe it? It's been more than 20 years since YouTube came online. Run it. Show everybody that first video.
Huh.
A museum in London is preserving part of that history. The Victoria and Albert Museum is displaying a reconstruction of an early YouTube web page from 2006. It features the first video ever shown on the platform. Me at the Zoo is a 19-second clip of then 25-year-old YouTube co-founder Jawed Kameem talking about elephants. The museum says it took 18 months to rebuild the page. Me at the Zoo, the very first YouTube video.
20 years. Seems like it's longer than that.
Right?
It does.
Me at the Zoo.
I would say that's history, right? Without that video, where do we stream this show? Right? So we're part of history. I think that's my thought process now. How do we become a part of YouTube history? We'll make $1 million trade right now and go. We are here, Hope.
Right now.
200,000 subscribers. Started off with a Zoo video.
We'll just hold on to this. Yeah, we'll hold on to this gold short for $5,000. We're selling the top, buying the bottom. YouTube history.
51.67 last trade there in gold. Let's take a look at the higher time frame chart, Hogue. We know we have that special guest coming in. Again, everyone, we have a special guest coming in to talk the equities. So we'll make sure we get these charts out of the way. House count short right now, one micro gold, and I am not still in Mexico. For everyone wondering, I was able to make it back safely. Not to my home, to Chicago. You guys can see the office in the background here. but the show must go on. Hogue, let's take a look at these higher time frame charts in gold.
All right. As usual on Mondays and Fridays, we like to go way out there. We're looking at the monthly chart in gold. Still see all that excess last month on the high. We're inside this month. Again, the market looking for opportunities to facilitate two-sided trade. How did it do last week? Well, last week we tested the weekly kickoff low, which remains the same. This week, the weekly kickoff high is exactly the same as last week. So what we're looking for this market to do is what markets typically do, is rotate from high to low, low to high, high to low, low to high. Take a look at the daily. There's our look last week below the weekly kickoff low, nothing but rejection there. And the market is doing what we might think it would do. It failed to hold below the weekly kickoff low. Buyers came in, and the market has been rotating back higher to that weekly kickoff high. We don't know if that level is going to hold, but it is, one of the more important levels, longer time frame levels in a market that has been largely short time frame controlled. If you didn't see enough evidence and examples of how we think this market is short time frame controlled last week, maybe we'll see some more of those examples this week. So the weekly, what did we do on Friday, or the daily? What do we do on Friday? We added 14,000 contracts, new buyers, new money coming into the long side. Was that longer time frame? Shorter time frame? Volume remains relatively low. We did see a little uptick in volume on Friday on that push to the upside with some new buying coming in. Are these going to be the buyers that are going to get caught too long at the highs if this thing turns around? Quite possibly that could be the case. Jay, what are you looking at on the daily here, my friend?
So on the daily, I did miss a couple of days, Hogue, but I do like to see that we closed above 50% of this the major sell-off that we had. Right, the 20% move to the downside. We closed back above 50% of it from a technical perspective, but I'm still keeping in mind, Hogue, the fact that we've said that gold has the potential to trade in this range for a while now. We tagged the 5200. Actually, we didn't even tag 5200 in the overnight. 51.9880 is the overnight high. I wouldn't be surprised to see this market continue to range. I like the short that we're in here for the opening range trade. Looking at the daily, we're above the 20 moving average, which is at 50.45. Another area of interest, that 20 moving average above that 50.25 midpoint of the sell-off. But I'm not convinced about the metals trading too much higher right now. So again, I like the trade that we're in. We'll see some things on the shorter time frame, but this close above this 50% Friday was pretty significant here.
Halfway back from that big pullback, closing above that on some decent volume and open interest increase on Friday is encouraging for potential continuation. But again, we're largely in short time frame control. Let's take a look at this on the 30-minute chart and see what kind of evidence we can see for opportunities for today. So Friday, value was higher. We had the market push higher. We closed pretty well, adding open interest. And again, value moved higher. We continued to push higher after the regular trading hour close. And we opened. And what did we do on the open? Well, we found buyers here, and we're still kind of seeing those buyers at least holding at above that level. No weekend gap to speak of. This blue line here is the base of a late spike